Hello everybody, welcome back to Gradual Financial Freedom. My name is James and this is the third episode in this series giving you a step-by-step breakdown of each sector that we are doing over my 400 different stocks that I have in a spreadsheet called with the dividend list. Now this is going to be the third one, so this is consumer staples, and I just want you to know that I have done some research on here, but this is only a way for you to see kind of where to go, but it's up to you to continue on and to make sure that what you pick is what you want. Now this is the third episode in this series, so I'm going to be putting a card into here so that you have the entire playlist, and then down below you will have a link to the last video of the series. So first, let's go ahead and get into what are the different sectors. So as you can see here, the first sector on the list was healthcare, then utilities and consumer staples. They are in the defensive area, so they are the ones that do not get hit as hard with a downturn in the economy because of the fact that we still need them. Then next after this would be cyclical. We have technology, finance, consumer discretionary, base materials, real estate, communication, industrial, and energy. So what are consumer staples? Consumer staples are items that we need, things like food, toiletries, and also include things that we don't really need but we still want to buy, such as cigarettes, alcohol, basically anything that is not a luxury item. As you know, I'm going to be going over the 4 top picks that I have picked out of here. So let's go ahead and get started with our first pick. British American Tobacco, ticker BTI. It is listed as near fair value by Yahoo Finance, currently trading at $39.60. And you can see the short term is down, but midterm and long term are listed as up. Currently, British American Tobacco pays a 67-cent dividend. They pay the second round of the months, so that is February, May, August, and November. Unfortunately, TipRanks has no analysts currently watching BTI. So I have nothing really to go off of here to say whether or not we should be looking into this going up or down. Next on the list we have B&G Foods, currently at $17.31 per share. Yahoo Finance has them listed as overvalued, but if you look, you'll see that their performance outlook is short-term up, mid-term up, long-term might be down. Currently though, BGS has a 40-cent dividend. They pay the first month of each quarter, so that is January, April, July, and October. Currently, TipRanks has 5 analysts watching B&G Foods. You can see here they have it as low $16, high $20, mid-range about $17.60 for this time next year. So if that's what we're looking at, then maybe it might be worth keeping this on your radar. Next on our list is Vector Group, ticker VGR. Yahoo Finance has them listed as overvalued. Their current trading price is showing as $12.74. You can see the short term lists them as down, mid-term up, long-term up. VGR is currently paying 40 cents on their dividend. They pay the third of each quarter, so that is March, June, September, and December. Currently VGR, like BTI, has no one from TipRanks analyzing it to say, hey, this is where the stock might go. So we're just going to have to see what happens over time. Next on the list is Macy's, ticker M, currently listed as $15.48 per share. Macy's is by Yahoo Finance is saying that it is undervalued. Short term looks to be down, mid-term up, long term down. Currently Macy's pays 38 cents on their dividend. They pay the first month of each quarter, so that is January, April, July, and October. Macy's has 10 analysts actually watching this stock at this time. They have it listed as low end by this time next year, $12, high end, $22, with the average about $14.67. So with it trading currently at $15.48, as you can see, it's saying down by this time next year. So this is what you can currently see. These are all the 4 stocks that I picked down below: BTI, BGS, VGR, and M. Now, something I added on the last video, and I'm going to continue on with this because I do want to show what would happen if you picked all 4 stocks that I picked in there and just put the $100 toward each of them to kind of see what your percentage rate would be on there, just to let you know that you should be doing your own research in here. But as you can see, if you did that, right now you have a $1,200 invested. Your dividend yield would be 5.37%. You'd be making $64.48 per year. Now lastly, I just want to go over this with you real quickly. I do want to make sure I mention this. I am not a financial advisor. Please take everything you see here and do your own research and kind of get an idea of what you want to do. I'm going to be showing you the entire list of consumer staples that I have on here. This is the entire list that you have. As you can see, there are a couple that are 100%. That is 100% are ones that have a big spread over the consumer staple market. They're not individual companies. As you can see here, there are a couple that are looking good. Now there is some that I do want to make 100% sure I mention. Number one is that ticker SALM. Down at the bottom of the list, you can see it is -2 on the operating margin, which means it's very risky. Plus, you have to put 69 shares, or you can buy 69 shares for $100. That right there just tells me that I would be very wary about doing it. But if you did it, that is $19.32 per year, as long as that dividend stays at 7 cents. But when you have a stock that has dropped in price, you might end up losing that dividend, so be very careful with what you're doing on that. Well, that's it for this episode. If you liked what you have seen, please do me a favor, hit that subscribe button, hit that like button. If you do want to continue watching the episodes that are here, also hit that bell icon so that you can get a notification when the next episode comes out. I'm going to try to put these out on a Tuesday, Thursday rotation until we are all the way through. And also, if you are looking into getting into Robinhood investment, please remember I have that link below. If you click it, you'll get a free stock, I'll get a free stock, and other than that, I wish you the best of luck on your path to gradual financial freedom.